So guys, yeah, welcome again today to today's tutorial on how to understand the structure of the market. Now let's start so that I won't waste much of your time. Yeah, looking at this, right? The first thing we need to know is understanding the trend. We have basically three major kind of trend, which are the uptrend, the downtrend, and then the sideways trend. You can as well call it the consolidation or the ranging market, right? So let me just explain what we have on this image here. For you to identify an uptrend, there's something we call the higher highs and the higher lows, right? That is what makes up a uptrend. Now looking at this place, this is a low here. This is another low, this is another low. But looking at it, you see that this low here is higher than this low. This low is higher than this low, right? So that is what makes it a higher low. It's not coming back to uh it's not coming back to the same level with this previous low. If it's coming back to the same level with this previous low, then it becomes a ranging market or a sideways trend, right? Having the same low here. All the lows are on the same level, all the highs are on the same level. That is how to know a ranging market or a sideways trend, right? Well, at this point we have a higher high and a higher low. This is the previous low. It is lower than this next low, and this one is lower than the next low. The same thing as the high. The high here uh, is lower than the next high, so that's why we call it higher high. So this high and the next high is kind of higher than this, which is this one. This next high is higher than this, which is this one. So this is how to identify uptrend. Obviously, the market is in moving in the opposite, the up direction here, right? The same thing in the downtrend. It's just the opposite of the uptrend, which we are going to have the lower lows and the lower highs instead of having high highs and the higher lows. Here we have the lower highs and lower lows here, right? So that's about that. So let's dive into the chart and see the practical example. So right now in the chart, yes, I would have loved to remove this, but I don't want to take your time instead of okay. But what? I will have to remove it. But regardless, let me just show you what I need to show you first before removing these things. So now talking about the what's it called again? The trend, right? Obviously now, we're having a uptrend here, right? Like I said, we have the higher highs and we have the lower low. The higher lows, right? Oh, sorry. So now, looking at this place now from here to this place, you can see we have let me just so that you can see what I'm talking about. So you can see we have this. Let me just clone this guy just so you understand what I'm saying very well. Okay, so with this now, we can see that this is an uptrend, right? This is an uptrend, rather. Why this over here is a downtrend? Obviously, this is a downtrend, right? This is a downtrend. Okay, this is a downtrend. This is a uptrend. So at this point, this is the previous high here. We can just call it a low. But the next low is this guy here. You could see it's not of the same level with the previous one. This is the next low. The next low is this low. The next low is this, and this. So it keeps moving up just like that. They're talking about the high. This is the high. The next one is this. Next one is this. Next one is this. Next one is this. So markets moves in this direction, right? So at this point now we have the downtrend. You can see the lower high and the lower low. So this is how the market moves. Now, here's another trend here. This is a previous, just see this, right? This is a high on its own, this point. Now is another high. Now is another high, right? So this high is higher than this high. This high is higher than this high. That's how it works, right? So that's how you even from just looking at the chart from distance, you'll be able to identify where the market is. Obviously, this is uptrend, 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 down, up, down, down. That's how the market moves, right? So it's either you see your chart in an uptrend or a downtrend or in a ranging market. Let's get something. Let's get a ranging chart. Okay, you can as well identify this to be a ranging chart. You could see at this point, nothing is really happening here, right? Nothing is clearly happening here, unlike these guys. So this guy is not really, though it's more like an uptrend, but it's not really making any sense. But it's really going to make sense on the probably 15 minutes or 5 minutes time frame, right? Just want to look for a very clear ranging pattern. Oh, okay, let me just go down to the lower time frame. I don't want to change my time frame actually, but let me just do that right now so that you can see what we are looking for. Okay, yeah, here you come. Look at this place. Yeah, you can see our uptrend here, right? This place we cannot say this is an uptrend, we cannot say this is a downtrend. This is a ranging market, a sideways movement. That is how the market behaves. So you see this one as well is a ranging market, or you call it a sideways movement, right? All right, so I like to go back to the 1 hour time frame. So this is what we had before. All right, so now that we've been able to clear what the trend looks like on a chart like this, what you need to do next is you can't just look at the market and feel like this is a downtrend and you just want to buy without being so sure of what you do of what's happening in the market, right? So being an SMC trader, you want to understand where you want to place your market where you want to place your trade and all that, right? So now we need to understand the trend. Like for example now, let us look for a clear trend so that's alright. So now let's just do something from here. So here now I can just say, okay, this is a this is a break of structure here to the upside. Alright, market break to the upside here. Just need to just understand how the market behaves. That's all. The market trend is breaking to the upside at this point. This you can even as well recognize this part as a break of structure, but we already have one that is higher, which is the most recent one. So the most recent one should be recognized, right? The most recent, according to this chart, I mean from this part here down like this, the most recent break of structure. Then we have this. We have another break of structure here. This is why I don't want to clear that chart initially so that it won't really take long. This is another break of structure to the upside. Then what do we have here? The market got here and then reversed back. So at this point, you can say this is a change of character. Okay, let me just so this is a change of character right here, right? Why do we call it a change of character? Because the market did not continue the trend. The market changed the trend to the downside at this point. And this is the point. This is now this is a break of structure to the upside. When the market comes down to this point, the market is we are expecting the market to continue pushing up when the market comes back to this zone. But since the market has refused to do that, the market has break to the downside, which is what we call the change of character. So the change of character just happened here, and now as you are no more looking for buys, you are now looking for sells, right? So looking at the market again, is another break of structure to the downside. So I can just clone this guy. So this is a break of structure to the downside. So when we have this break of structure to the downside, what actually causes break of structure? This is the part that actually causes the break of structure, right? So we can just map it as normally, probably as a trap, but I just continue it. Is another break of structure to the downside. Right? Is another break of structure again to the downside. We are not doing proper trading here, just trying to understand how the market moves, the structure of the market, that's all. So now at this point, I have another break of structure to the downside here. We expect the market to come here again, just as it has, come here then and then continue push to the downside. So now we have it here. Okay, sorry. So this is a break of structure to the downside from this point, right, to the downside. Now, instead of the market to keep pushing to the downside, now another change of character again at this point. So now you can call this place a change of character. You can call this place a change of character. Some people might actually want to take this place as a change of character. This place, but I will be taking this place as the change of character because this is the most recent break of structure to the downside. And what actually caused the break of structure to the downside is this push over here, right? Okay, well, that means this should be the change of character actually. Yeah, this should actually be where we should be able to recognize our change of character because this is what caused the push to the downside, which is the break of structure, right? This was from this end. So, and since the market got back to that same zone, and could not continue moving down. That is now when we now have a change of character at this point, right? So now you're having a change of character here to the down to the upside again, though it's not that clear, but at least this is a change of character to the upside. Now you have another change of character here. Like this is another change of character at this point. Like this to the upside again. Like that, like that. Now, what do you see here again? The market is trying to range at this point here. There's no clear trend of the market. But this is the most recent clear what I call it, change of character, which is what causes this break of structure to the upside. As well, we can use another break of structure to the upside though. So don't let us just overlook it. Here's a break of structure to the upside. At the same time, the most recent one is here, which is the break of structure to the upside, right? So what we now have, the market is supposed to continue pushing to the upside, but long run, the market change trend at this point. So we can call this place a change. Oh, sorry, what did I just do? A change of character, right? Again, right? Why am I taking this place as my change of character? Because this is where the break of structure actually happened. I mean, this is where the break of structure happened actually, but this is what caused the break of structure, the push to the upside. Then, so at this point, normally as the market get to this point, the market is supposed to continue pushing to the upside, but couldn't push to the upside. Meanwhile, whenever we have a ranging market, we should know that the market is about to probably make a new trend, probably a continuation trend or probably a reversal trend. So again now, you could see a change in character coming to the downside. Again, we have the same thing happening here. We have the break of structure to the upside here, which is very, very uh obvious here, right? Which is very, very obvious. So you can call this a break of structure. Like that, like that, like that. To the most recent break of structure. I'm already taking much of our time. Like I said, I don't want to. I see I'm already taking much of our time. So this is another BOS here, which is the break of structure, right? Like that. You could see the market just keep pushing to the upside like that, forming a uptrend. Right now the market is closed. This is a Friday, so the market is closed. Alright. So this is obviously an uptrend, having higher highs and higher lows, right? So depending on your understanding of how the market moves, that's how you'll be able to just want to see, right? So now we have the high, the higher high, the higher highs, the higher highs. We have the lows, the lower lows, the lower lows, the lower lows. This is the most recent break of structure right now on this time frame right now is what we can say to be a current break of structure, right? All right. So on the since like I said, the market is closed. The normal day now we have our I mean our FVG is actually present here. Our FVG is present here. No, let me just leave it there. Okay, don't worry. I don't want to. This is not what I want to explain actually. I just want to map it out. We actually have our FVG, which is fair value. Okay, let me just but make it look small bold so that it's what I'm talking about. We have our FVG present already from this. It usually happens within three candles, which is 1, 2, and 3. These gaps, right? So to this zone here, this is where we have our FVG. Then what causes this push to the upside? You can map this place out as what actually caused the push to the upside. Though there is more to it, I'm just trying to explain the basic part of it. Right, so you can call this place our FVG. Then this might probably be our point of interest where we set our trap and then wait for market to retrace back to this point and then keep pushing to the upside, forming another break of structure to the upside. Right, so that's all I can say with this. We already have a long, this video is already very long. Yeah, so whenever the market opens again, then that is when we're going to determine where the market is going to move to. So with this ongoing, I don't believe we've been able to understand what our market structure is all about, and I don't believe this should be on the 4 hours or a time frame. I'm trying to understand my right. So let me waste the time. This one is just my own personal business right now. So you can see the same things happening here. Trend is a book of structure to the upside and all that. Right. So thank you very much. Thank you for sticking to the end. And you're going to see in the next tutorial. Thank you.